Hi everyone, you're listening to Tony Kayanan and welcome to the second part of our stock market investing online seminar. In this video, I will be sharing with you the basics of stock market. What is the stock market? Who are the stock market participants? What are the share of stocks? How does the stock market work? How you can grow your money in the stock market and lots more. So be sure to watch till the end of this video. If for some reason you haven't watched the first video, please watch it first as there are lots of topics that have been discussed about the financial literacy and the importance of investing. You can find the link of the first video in this page. Now, if you are ready, sit back, relax, and get ready to learn. Today, I am going to talk about lots of topic about stock market. But first, you should know what stock market is. A stock market is a place where share of stocks are bought and sold. It is a venue where people can invest in publicly listed companies in the Philippine Stock Exchange. Dito ka pwedeng bumili or magbenta ng share of stocks ng mga kumpanyang nakarehistro sa PSE. Magiging part owner ka kapag may shares ka sa mga kumpanyang ito. Later, I will discuss further the share of stocks. But who are the stock market participants? Participants are the following: Philippine Stock Exchange or PSE, publicly listed company, stockbroker or the trading participants, and you as an investor. Three of these four participants are actively involved to make the stock market work. These are the investors, trading participants or the stockbroker, and the PSE. Iisa-isahin natin yung mga yan. Ano ba ang role nila sa stock market? First, the Philippine Stock Exchange or PSE. The role of the PSE is to safeguard the interest of the investing public. They do not directly transact with the investors. PSE acts as a guardian of the stock market. It enforces rules and regulations that must be complied by the publicly listed company and the trading participants. They have two offices, one in Ortigas and one in Makati. Second is the publicly listed companies. These are the businesses that offer share of stocks to the public. A company becomes publicly listed when its shares are traded in the PSE. The company must comply with very stringent requirements of the PSE before offering stock investments to the public. Third is trading participants or stockbrokers. A stockbroker or trading participants act as an agent or broker between buyer and seller of stocks in the stock market. A stockbroker must be licensed by the Securities and Exchange Commission before executing as a middleman in putting orders to buy and sell shares of stock. Fourth one is stockholders or the investor. They own share of stocks of a publicly listed company. They become part owner of the company once they have purchased certain number of stocks. Before we can proceed with how does the stock market works, let me discuss first what is share of stocks. Share of stocks represent ownership of a certain company. These shares are being offered to the public who has the ability to buy and sell ownership. It can be called shares, stocks, or share of stocks. When you have ownership in a publicly listed company, you are entitled on a portion of its profit. Why does publicly listed company offer share of stock? The reason is that companies are seeking for capital to be used for expansion of their business. These funds can be used in building a new building or hiring additional employees, etc., etc. As a result, the business becomes more profitable. How does the stock market work? We have what we call trading cycle. The investor will contact the stockbroker to place orders, that is, buying and selling of stocks. Stockbroker then will transmit the orders to PSE. The PSE execute orders, and sends confirmation to stockbroker. And then, the stockbroker will get back to the investor to confirm orders of buying or selling. The stockbrokers are the middleman between PSE and the investing public. You may be wondering, paano ka nga makikita sa stock market? Remember that investing in stock market means you are a part owner of a certain company. So if the company is profitable, you have your share in its income. This is either dividends or capital gains. Sometimes it can be both, depending on the company's performance. Let's discuss them one by one. Dividends declared by the company are your share of earnings in the company as an investor. Why do companies declare dividends? It's because they are part owners too. It's simply the profit sharing between the investing public and the company itself. Pinaghahati-hatian ng mga shareholders ang kita ng kumpanya. Ito ang bahagi ng iyong kita sa iyong investment. Let's have an example for this. You own 1,000 shares in XYZ company at the end of the year. Since the company is performing well, they declare dividends at 2 pesos per share. This is so they can easily divide the company's earnings. So, to compute it, meron kang 1,000 shares, multiply it by 2 pesos dividends per share equals 2,000 pesos passive income. Next one is capital price appreciation, increase in the stock price. It's an increase in the market price of your stock over time brought about an increase in its potential value and the demand to buy its shares. The faster the company can grow, the faster its price can appreciate. If yung kumpanya maganda ang performance and tumaas yung demand ng stock, tataas ang stock price. So for example, today you bought 1,000 shares amounting to 15,000. So that would be 15 pesos per share in ABC company. After 1 year, the company's price per share went up to 20 pesos per share kasi lumalaki na yung kumpanya and the demand to buy shares increases. Marami ang gustong mag-invest kay ABC company. So, if you have 1,000 shares at 20 pesos, magiging 20,000 na siya. Yung investment mong 15,000 magiging 20,000 na siya. You just earned 5,000 pesos passive income. That is 33% return on your investment. Note that these results may vary depending on the performance of the company you are investing. As you can see, money is working hard for you when you are investing in the stock market. But first, you have to consider the following factors when you are investing in the stock market. These are amount of your investment. Second is company's performance. Number 3, market performance. And number 4, your strategy. Iisa-isahin natin yan. Amount of your investment is not important how much investment you need to invest as a beginner. You can start at a minimum 5,000 pesos, then decide how much you can invest on a monthly basis. It can be 1,000, 2,000, 3,000, etc. Second is the company's performance. Of course, you will invest in the company that are performing well. Pag kumikita sila, kikita ka rin. Number 3, market performance. It will help you forecast kung ano ang magiging performance ng company. Depende sa galaw ng market if magiging profitable ba ang isang company or not. Example, if in demand yung isang burger company, you will learn that this company is worth investing kasi alam mong malaki ang demand dun sa product nila. The last one is your strategy. Diskarte sa pag-invest ay malaking factor para ma-achieve mo yung financial figure na gusto mo. These 4 factors will determine how much money you can make in the stock market. That is why, if you are a beginner, you need an expert guidance to keep you on track para hindi rin masayang ang iyong investments. In video number 3, I'll teach you methods of investing that will definitely help you with your investments. Next topic I would like to share with you are the 4 golden rules when investing in the stock market. First is invest early. Second, invest regularly. Third, invest long term. Fourth, invest using diversification. First one, if you can start early, the better. Remember the power of compounding interest that was discussed in our first video? That is the concept of investing early. Second is invest regularly. Consistency is the key. Investing regularly will keep you on track. Set aside a specific amount of money that you are willing to invest on a monthly basis. Dapat consistent ka. Invest long term. Investing in the stock market is like planting a tree. It should be long term. You'll see your money tree growing and it will bear fruits in the long run. Invest using diversification. Don't put all your eggs in one basket. Diversification will lessen the risk of losing your money in the stock market. There are lots of companies listed in PSE. It is advisable that you invest in different companies with different line of businesses. Basic commodities like food, utilities, shelter, clothing, etc. You may be wondering how much is the initial capital to invest in the stock market. As I've said earlier, for as low as 5,000 initial capital, you can start investing in stock market. Then on a monthly basis, you can set aside maybe 10 to 20% of your monthly income to put on your portfolio. Please take note that the money you will be investing in stock market should be considered for long-term investment. It's one of the 4 golden rules, remember? You should not use this for your short-term or daily needs. You can never predict the value of your investment in the coming years. It may be high or low. You should strategize for a long-term investment. You can get expert advice on how you can properly invest your money in the stock market for the long run. How you can invest in the stock market? There are 2 ways of investing in the stock market. These are indirect investing and direct investing. What is indirect investing? This involves giving a certain amount of money on a regular basis to someone who will professionally manage your investment. This is commonly done through funds or investment trusts. Examples of these are mutual funds and unit investment trust fund. Mutual fund is a type of investment wherein funds are pulled from different investors to form massive amount of money. This is for the purpose of investing in diversified portfolios such as stocks, bonds, and money market investments. These funds are professionally managed by a fund manager who is responsible in investing the money in securities with the potential of earning from capital gains and income. If mutual fund is invested in the stock market, investors are also shareholders of the company and are entitled to receive dividends. These are also investment products registered and regulated by the Securities and Exchange Commission. Next is Unit Investment Trust Fund. UITF is a type of investment wherein funds are collected from different investors. This is to form trust fund for the purpose of investing in diversified portfolios such as stocks, bonds, and money market instruments. These funds are professionally managed by a trust manager who is responsible in investing the money in securities with the potential of earning from capital gains and income. In UITF, investor buys units of investment in the fund. The only difference between mutual fund and UITF is that UITF does not entitle investors to become shareholders of the company. Both mutual fund and UITF investors participate proportionally in the gain or loss of the fund. What are the advantages pag nag-invest ka in mutual fund or indirect investing? Fund or trust manager will be the one to manage your investment. Di mo na siya po problemahin. It is very convenient kasi they are the one who will invest for you. You don't need to study the market performance. Ang disadvantage naman, they will be charging you for the services provided. It is the cost of your convenience. Limited earning capacity dahil may cap ang pwede mong kitain dito. And you will not grow as an investor. Kasi magbibigay ka lang ng pera, sila mag-i-invest, wala kang direct participation. And you will stop learning as an investor. Now, let's go to the direct investing in stock market. Direct investing is a way by which investors make a direct investment into the stock market. Investors are the sole responsible for their stock market investment decision. With the help of a stockbroker, they can place order of buying and selling of share of stocks. There are two types of stockbroker. These are traditional broker and online broker. The traditional broker is a licensed agent who provides professional advice on your investment. Traditional stockbroker can work closely with you and can provide you different stock tips depending on your investing needs. They can also advise you when to buy or sell a stock. Of course, they will charge you a fee or commission for executing your buy and sell orders. Ang mga advantages if you have traditional broker, you will get professional stock advice, tips, and services. There is someone you can talk to if you have questions about your investments and future investment plans. They can work with you on your short-term or long-term investment plans. Ano naman ang mga disadvantages? They charge higher broker fees and they prioritize big clients. Other type of broker is the online broker. It's an online stockbroker who places order for your buying and selling stocks. Through online broker, you have a real-time updates on your portfolio 24/7. Your online broker will provide you stock reports and market information. You just need to have a computer and internet access to have all of this information. They typically charges the lowest rate in the market since many people are using online brokers. But how much do they charge? For as low as 0.25%, as in wala pa sa 1%. Here are some online brokers available in the market. First is the BPI Securities Corporation, second is the Hall Financial, third is First Metrosec. Ano naman ang advantage pag ginamit mo ang online broker? It's like a DIY style of investing in the stock market. You are the one who decides what stock to buy or sell. You have full control on your portfolio. You will learn more as an investor. They have the lowest broker's fee. Disadvantage naman, you have full responsibility on your investment. Whether you gain or lose, you cannot blame anyone. Do it on your own nga. Unlike other traditional broker, online brokers only provides generic market or stock information. Now, how to choose a stockbroker? First, you have to consider broker's fee. There is a corresponding broker's fee in every transaction you make in the stock market, whether you sell or you buy stocks. If you are a beginner with limited starting capital, choose the one who charges the lowest. That way, more of your available money is put into your investments rather than transaction fees. Next is relevant information. As an investor, you need to get relevant market information that will help you with your investment. Choose the one who provides real-time market information and are easily accessible. Third, background check. You have to research more about the broker you may want to deal with. It is important that they are registered with the PSE. Overall, you should pick a broker who matches your investing needs. Of all the information and options I have discussed, I am personally investing directly in the stock market using services and information provided by my online broker. I am not saying that you don't invest in mutual funds or UITF. There are lots of them that are doing well in the market. It's all up to you what kind of investments you may want to deal with. But as a beginner, I would recommend you invest in stock market using online broker due to the following reasons. First, lower initial capital requirement. For as low as 5,000 pesos, you can invest in the stock market. Second, charges lowest fees. For as low as 0.25%, you can easily put order to buy or sell stocks. Third, online brokers provides market research and information to their clients 24/7. Fourth, online brokers provides free seminar to their clients. 5. I want to learn and grow more as an investor. And the last one, I want to be personally responsible on my investments because these are my hard-earned money. Call Financial provides all of these services to me. That is why I am recommending them as your online broker because I am a satisfied customer. And for the record, they are the largest online brokerage in the Philippines. Just a bit of disclaimer, I am not associated with Call Financial, neither one of its personnel. Personally, for me, it's more convenient for a beginner. And we're done with the second part of stock market seminar. I hope you've learned a lot from this video. And before I end up this session, I would like to give you the following notes. Investing in the stock market allows your money to grow more faster over time versus keeping your savings in the bank. And it should be for long-term purposes. It can be for the preparation of your retirement. This is also a good hedge in beating inflation. Though stock market is very risky in nature, it doesn't mean you will not invest. There are available information that you can use to mitigate or lessen the risk. That is why choosing the right stockbroker is very important. The reason behind that is that no one knows what will happen to the prices of the stocks in the future. The exact future value of your investments cannot be predicted. It can be high, it can be low. Therefore, if you are a beginner, you need to seek guidance from the experts. Experts know how to diversify investments. With diversification and other investing strategies, risk can be mitigated or lessened. Now you have the idea on how the stock market works. What you will need to do is to act on your investment. You are now one step closer of becoming a stock market investor. In the next video, you will learn how to get started investing in the stock market. What are the tools you can use, to whom you can get stock updates or expert advice, and different stock market investing strategies. So watch out for the next video. I will be sending it on your email. Thank you, and I hope to see you in the next video. Bye!